So you actually came to this video because you're in the process of trying to figure out a strategy that you want to go ahead and start trading that can allow you to become a profitable trader. You also came to this video because you're actually looking for something that's easy to understand and something that is very, very effective. Well, you came to the right place, family, because that's exactly what we're going to talk about today. I'm going to break down another strategy video for every single one of you guys that are watching, and this one is probably going to take the cake, because this strategy that we're going to talk about, guys, implements market structure, price action, but also implements a moving average that will take your trading up to a completely different level. And that's why I'm excited to create this one for you guys. And I'm not going to waste too much time with this intro. I want to go ahead and get straight into this banger. But before we go ahead and do that, I want to go ahead and give a massive shout out to all of my Noti Gang members in the chat, in the community. I appreciate you guys. Massive shout out to these Noti Gang members on the screen right here. Bow. Right, thank you guys for supporting. I create these videos for all of you guys. If you want to be a part of Noti Gang, it's very simple. Make sure to subscribe to the channel. Make sure to comment Noti Gang down below. And also, most importantly, make sure to have notifications turned on so that you are updated on every single banger that I do decide to drop here right on this channel. So without further ado, family, let's get right into this banger for today. Okay, guys, now let's go ahead and get straight into the strategy, guys. So there's actually going to be a few steps that you want to implement when it comes to trading this specific strategy, which again is going to entail learning how to read market structure, price action, and also learning how to absolutely read price action off of, an indicator like the moving averages, which is something that I'm going to talk to you guys about today. Okay, so if you guys look on my screen right now, I actually have two moving averages on my screen, guys. We have the 50-period EMA, exponential moving average, and we also have the 20-period EMA as well. And we're going to utilize these EMAs, guys, for specific reasons, okay? Because there's going to be a few things that we want to look for before we actually go ahead and decide to jump into an opportunity. The first thing that we want to do, guys, and this is no matter what type of trader you are, no matter what time frame you're looking at, the first thing that you always want to do when you guys start to analyze the market is to figure out the overall trend of the market, right? What is the flow of this current market? Okay, because our job as traders is to look for the path of least resistance, okay? Because what we're typically doing here is we're trading off probabilities, all right? We're not going to be 100% accurate. We don't know for 100% certainty what the market is going to go, what it's going to do. So we have to rely on probabilities, and we have to take the highest probability type setups. And the way to do that is by usually staying with the trend as opposed to trying to trade against it, okay? So step number one is to make sure you identify what the trend or the flow of a market typically is. Now we're going to take a look at GBP JPY. And when we're actually looking at this chart, guys, our objective is to literally take a look at it and see what the trend is. So we can look at GJ right now and we can clearly identify that the market has been going to the upside, right? So we've been in a bullish trend, in an uptrending market. Now there's two ways to really identify the trend in the market, guys. It's either by just strictly visualizing it and looking at something like market structure, where we're creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows in the market. That is one way to really identify the trend, right? And that's a very effective way. But there's also another way as well, guys, and that's pretty much using the moving averages. So very simple. Whenever price is above the moving average, that is telling us that we are in an uptrending structure. Whenever price is above the 50-period moving average, to be specific, we are in an uptrend. Another way to utilize it is if you're going to have both of these moving averages on the screen, the 20 and the 50, whenever the 20, which is the lighter colored moving average, whenever the 20 is above the 50, we are also in a bullish trend. And whenever they cross, like if the actual 20 was to cross below the moving average and then price ended up following that, then that is telling us that the market is reversing and we are actually going into more of a downtrend. Okay, so very simple. For GJ on the 1 hour time frame, we have been in a bullish trend, guys. Now, how does this work, right? What is step number two here when it comes to this entire strategy? Step number one is to identify the trend. Step number two, guys, is to now wait for a pullback after we identified the trend. Because like I mentioned, we want to look for a series of higher highs and higher lows when we are in the process of actually identifying that uptrend. But when we are in an uptrend, guys, we don't necessarily want to buy when the market just created a higher high, because at that point, now you're probably chasing the market, unless you're a breakout trader, which again, that's a whole different story. But what you typically want to do is you don't want to buy the higher high of a market, because now you're buying at premium levels. You want to wait for that discount to come in. You want to wait for the market to actually pull back, and you want to buy the next higher low that gets created. So if we're looking here at GJ, guys, and we're looking at this entire trend, what do I mean by that, right? Well, let's go and look from over here, right? We had the market go ahead and give us a strong push up. The moving average is shifted. We are now bullish because the 20 is above, the actual 50. We identify, which again is going to be step number 3, or actually step number 2 is to identify levels of structure and support and resistance. Okay, so number 1 is to identify the trend. Number 2 is to identify structure, which is going to cause us to identify our higher low in the markets. And then from there, step number 3 is pretty much just going to be able to look for your entry. But we're going to take a look at this right here. All right, now obviously looking at it from a hindsight perspective is very easy to identify it. But this is why it's very important, guys, to really just get familiar with what we're supposed to be looking for when you're looking at structure and trends, so that when we don't see it in hindsight, when we don't see it after calls, you're already picturing what's expected, okay? So right now we see the strong push up in the markets, which this high right here ended up breaking this high down here. We've seen the moving averages cross. All we have to do now is wait from this higher high to quote go lower and give us a higher low. And this higher low is a higher low because it's higher than the previous low. And then once we're able to identify that higher low by aligning it with either the moving averages or aligning it with actual structure to the left, because structure to the left gives us clues for future price action or future reactions. And then once we're able to see price go ahead and close back above the moving average for this specific example, that could have been your entry, guys. So very simple, 1, 2, 3 strategy, right? We have the impulse break of structure telling us the uptrend. We have the pullback, the reaction, the retest back to structure as step number 2. And then step number 3 is waiting for that entry and a break back above the moving averages, whether it be the 50 or the 20 is your entry in that step number 3, right? So that's one way to actually go ahead and look at it. And let's go ahead and keep on going with price, right? So then we've seen price again. This is our newest higher high. We've seen price actually come back up. We created a lower high right here because we didn't ended up breaking that, which again, that's not really too much of a big deal. And an uptrend, what we really focus, guys, is the sequence of higher lows that are being created, right? Not the higher highs. It's the higher lows that we want to focus on, okay? So price can go ahead and create lower lows all day long. As long as we don't break the lows, we still want to look for that continuation. All we want to do now is, again, utilizing our moving averages to help us identify newfound levels of structure or support and resistance. So for this example, we've seen price come up. Yeah, it didn't actually break the highs, and that's not a big deal. But look what price did. It pulled right back down. It also pulled back down to levels of structure, okay, previous levels of support and resistance, and that could have been another opportunity to get involved in this actual trend. Now, where would have our entry been, right? Where could we have entered? Very simple. A break back above the 20-period moving average can be your entry. So you could have entered right here on this break back above, stops below the newest found higher low, and then rode it out. And then look what price did, right? We ended up creating a new higher high. Wait for price to pull back down. Again, step number 1 is identify the trend. Step number 2 is wait for that pullback to occur. Identify structure as well, so that we can really get some confidence with this entry. We see structure, this pullback lined up previously with structure, support and resistance in the past. Previous resistance, once broken, will turn into support. And then from there, guys, a break back above the blue line could have been your entry to get into the next move. And similar concept, this entire trend, guys, was easily identified, right? So then we seen another higher high be created. What's the concept? Step number 1, identify the trend. Step number 2 is wait for the pullback and identify structure. All right, we have structure level right here, but we also have this previous area of accumulation right here as well. And again, your entry after the actual higher low is formed is a break above the blue line. Stop loss below the higher low that was just created. And then you continue to expect new higher highs to be formed, right? So very simple. That's exactly what we've been seeing, guys. So even right now with GJ, which again, this is in real time now, this is actually where price is currently at. What we can see now is the market itself, guys, also came and created another higher high in the markets. Now, what we need to do is just wait for price to pull back, line it up with structure. Once again, I really do like this area of structure down here at around 163,200. And then once we go ahead and get a candle to close back above the 20 period moving average, that can be our entry all day long, right? And this is found, guys, I mean, you can literally identify this stuff on all different time frames, right? A bunch of different time frames. It happens very, very often, okay? And that's something that I want you guys to really get in the habit of identifying, which is identifying the trend, wait for the pullback, and then go ahead and just look for your entry on a candle closure above or below the moving average that is absolutely shown. Now, again, don't just take my word for this, right? Actually go ahead and back test the strategy when you actually identify a clear trend being formed. Again, this is a trend trading strategy, okay? Trend trading. So you have to make sure that you identify an actual trend, and the way you identify it is by looking at those higher highs and those higher lows being created. And once you identify that, or at least for uptrend is higher highs, higher lows, downtrend is going to be lower lows and lower highs. When you identify that, then all you have to do is go ahead and follow the step-by-step process that I just showed you guys. It is that simple, okay? Trading is extremely, extremely simple to understand, especially when you find a strategy that is very, very simple for you guys to comprehend. And then once you get the strategy, that's when the hard part truly comes in, because then it's going to be all about you and your ability to be disciplined to follow your rules, your discipline to be, following risk management, your ability to control your emotions, your ability to have patience to allow the trade to actually play out, and your ability to be a professional loss taker at the end of the day, because there is going to be a time where you do end up taking a loss. And then at that point, understand why you took that loss, probably because the market is just reversing, and then you can go ahead and ride the opposite direction, as long as you are identifying that a trend is actually being created as well. It's that simple. All right. The strategy is the easy part. Don't go too crazy, family, trying to find a golden strategy, because there ain't no such thing as a golden strategy in the Forex world, right? Find a strategy that's easy for you to understand, and then go ahead and work on the most important aspects of the market, which again is emotional control, discipline, right? Risk management, money management, trade management, all that aspect. And if you can do all that, then you will see massive results trading. Family, I appreciate you guys. This is the simple strategy, 1, 2, 3 strategy that I want to bring you guys today. If you got some value from this video, family, go ahead and like, subscribe to the channel, and comment down below, family, your thoughts, comments, or concerns, and I'll go ahead and give you guys a reply as well. And I look to continue providing you guys with massive value on this channel. Thank you guys so much for watching, and I'll catch you guys on the next one.